Okay, so you get multiple order blocks on your chart. Cool. But then you're stuck with the decision on which one to trade. Now, this is actually a very important decision. Do you trade this order block? Yeah, you could, but it turns out it was too weak and price broke right through it. Not good. Well, maybe you trade the lowest order block. That would make sense. Since it's the lowest, that means it has to be the strongest, right?
You sure about that?
This is the ultimate dilemma multiple traders face every single day, and if you don't know how to pick the correct one, you can lose a lot of money.
I am never gonna financially recover from this.
Well, I wanted to find a way to pinpoint the best order block possible, to be able to find the order block that had the best probability of working. To do this, I had to do a lot of research, a lot of backtesting, and I mean a lot of analysis. That's when I discovered what I'm gonna call the inducement strategy. This will instantly identify which order block to choose that gives you the highest probability of it working. So how do we find the strongest order block? Well, whenever a chart is moving in a clear direction, in this case bullish, it will make higher highs and higher lows. Pretty simple. A lot of the time there will be multiple zones to buy from. In this example, we have two different zones to choose from. We have what I'm gonna call the inducement zone, and we have our true zone. Now, if we look up the definition of inducement, it'll tell us that it means a thing that persuades or influences someone to do something. In other words, a trap. Now, there are multiple ways to look at this, but it's basically an area that looks good for an opportunity to the normal person, but in reality, it's a weak zone that won't hold. So oftentimes price will come back down to this zone and induce traders into thinking it's a strong zone to enter in,